Dear viewers, once again welcome to my channel. Today our topic is accounting. In this topic, we will discuss what is accounting, its definition and the types and importance of accounting in business. Accounting is basically a tool which helps keep track of money and provide a clear picture of how well an organization is doing financially. The process of accounting has multiple steps. In accounting process, following steps are included. Number one, recording financial transaction. First of all, any bookkeeper can record transaction occur during the accounting period in books of accounts. Number two, compiling the records into various books of accounts. Then these transaction or journal entries will further transfer to different book of account. Number three, analyze the financial information. Number four, derive interpretation and find patterns. 5. Communicate the information to various stakeholders. Accounting is an indispensable part of any organization. Let's understand why accounting is important to a business. According to importance of accounting, the accounting is divided into three subgroups. Number one, stakeholders. Number two, efficient use of money. Number three, compliance. Accounting is important because it helps stakeholders understand an organization's financial performance and whether it is making the most efficient use of its money. It helps stakeholders know if the organization is making the most efficient use of money, whether the business is making profit or it is running on losses. Accounting always helps with compliance, since most businesses are legally required to disclose the statement of account to a regulatory body. Depending on the kind of transaction, objective and need of the org, there are different kinds of techniques that accountants use. Number one, financial accounting. Number two, managerial accounting. Number three, tax accounting. Number four, cost accounting. Number five, social accounting. Now we discuss financial accounting in detail. Financial accounting focuses on preparing financial report for external shareholders of the business like investors, creditors, regulators and the general public. Its objective to prepare the three main financial statements: income statement, balance sheet and the cash flow statement. Number two, managerial accounting. Managerial accounting focuses on communicating financial information to managers and executives so they have access to relevant, timely financial information and can make well-informed decisions. Managerial accountants work closely with other teams like marketing, operations and finance to ensure that financial information is shared and used effectively throughout the company. Tax accounting. Tax accounting deals with the preparation and the filing of tax income and the compliance with tax laws and the regulations. Its primary objective is to minimize an organization's tax liability by taking advantage of tax deductions, credits and other incentives tax authorities offer. It always focuses on ensuring that business pay the correct amount of taxes and avoid penalties. Cost accounting. Cost accounting helps business analyzing spending and make the most efficient use of money. There are various cost accounting that provides insight into the cost of production or service. Manager and executives use cost accounting to make informed decisions about pricing, product mix, and production processes. Next type of accounting is social accounting. Social accounting is the process of measuring and reporting an organization's social and environmental performance and impacts. It goes beyond just financial numbers and it take into account the broader effects of the organization actions on society, the environment, and the stakeholders. The goal of social accounting is to encourage organizations to consider not only their economic success but also their contribution to social well-being and environmental stewardship. Now we can discuss how does accounting work. Every single financial transaction by the company is recorded in the books of account. At the end of the accounting period, the accountant prepares reports that summarize the company's financial performance during that period. These statements are then used to make decisions to improve or maintain the financial performance of the company. There are two ways of recording the movement of money. The generally accepted and widely used method is the double entry system. There are many advantages of this method over the single entry system. We can further discuss double entry system and single entry system in detail in another video. Now we can discuss ways of recording financial transaction. There are two ways of recording financial transaction as used by accountants. One is cash method and the other is accrual method. Now we can discuss these method in further detail. What is cash method? In the cash method, a transaction is only recorded when cash is exchanged. Credit or non-cash transactions like depreciation are not recorded. One of advantage of this method is that cash method is simple enough to be used by the founder themselves and therefore helpful the founder just starting out. Disadvantage of this cash method is highly simplified and most of the time inaccurate. Now we can discuss accrual method. The accrual method records any transaction that adds or deducts value from the business. Advantage of this accrual method is mathematically accurate and more robust. Disadvantage of accrual method is more complex and thus require the service of a professional accountant. It's enough for today. In next video we can discuss single entry system and a double entry system. If you are new on my channel, please subscribe and like my channel and share with your friends. Thank you and take care. We will meet in next video.